John, you made one of the most famous investments in Wall Street history. Over a period of time, you put a short on, in effect, to make it simple, on the mortgage market around 2007 or so. And that trade, it is reported, made roughly $20 billion or so for you and your investors. Nobody has reported anything more profitable than that in the Wall Street, I'd say, last couple of decades or so in one trade. Did you have any doubt that that trade was going to work?
Well, we were pretty convinced that the mortgage market, segments of the mortgage market, were overvalued and were likely to implode. So we took a very concentrated position in these securities, and what we expected to happen happened.
It can't be that easy because nobody else quite did what you did. So at the time that you were doing it, did you have any sleepless nights saying, hey, I might be wrong and maybe I'll lose a lot of money, or you didn't really worry about that so much?
Well, again, it was structured where the downside was very limited. I think the reason why other people hadn't done it is because there had never been, according to Moody's and S&P, a default of an investment-grade mortgage-backed securities. Mortgage-backed securities were viewed as the safest securities next to treasuries. And that was essentially true up until that point. What they missed was the underwriting quality had never been as poor of securities as it had been in that period. So the fact that they hadn't defaulted in the past had nothing to do with whether or not the securities that were being issued would default in the future.
The idea for doing this, was this something that came to you one day when just reading the newspapers or watching Bloomberg on TV, or did somebody who worked for you come with this idea? Where did the idea come from?
I developed a specialty, which very few people do, in shorting credit. The difficulty in shorting credit is you have to get a borrow. They're generally illiquid, so you can never get size. But I never gave up on looking, and finally we found it in the mortgage-backed securities market, which at the time was larger than the treasury market. So there was literally unlimited liquidity. And because of the development of the credit default swap market, you didn't have to get a borrow. So there was synthetic securities, just people trading synthetically on actual bonds. And you can do 100 million. We were doing 100 million on a clip, 500 million a day with banks, in some cases $1 billion a day with banks. So there was massive liquidity to set up these positions.
So when you did your famous trade, you became world famous. Before, you were relatively unknown to the public. How did that change your life? All of a sudden, people are calling you all the time. High school friends are saying they always knew you were going to be successful, and they're calling you for contributions or whatever else. How did your life change?
Well, it was very funny. I remember the time that it happened, David. I was one of our investors called me. It was in February '07. And our credit funds were up 66% net in February. And the investor called, a German guy living in Luxembourg, and he said, John, I just got the monthly results. I think there was a mistake. It said 66%. You meant 6.6%. And I said, no, it was 66%. He goes, well, that's impossible. I've invested with Soros, with Tudor Jones, with everyone. No one's been up 66% in a year. How can you be up 66 in a month? I said, well, that's what happened. He goes, well, then you must be reporting gross returns. So 66, I said, no, that's a net. He goes, well, 66% net must be 80% gross. I said, well, those are the numbers. I said, well, that's the case. And shortly after that, all our investors got these results, and it leaked out to the press and then became the cover story in the Wall Street Journal, which was picked up globally, that we had this incredible performance in February, up 66% net, and that performance continued throughout the year. The funds wound up being up close to 800% net for the year. In July, we're up like 200% net. So it became kind of a global phenomenon on this performance, and we became very well known. And it did change my life, but in a positive sense, it opened a lot of doors, to meet all sorts of interesting people. Our funds soared in value, not by raising money, but based on performance. We went from $6 billion to $35 billion of assets under management over 2 years based on performance. We became one of the top 5 hedge funds with assets under management at that time. And you know, opened up a lot of doors and became very interested in terms of the people that I met.
It was reported in the press that you had to write a check at one point to the federal government, IRS, of over $1 billion. Does it feel nice to write a check over $1 billion, or is it a little bit painful to the IRS?
Well, we were big supporters of not only the U.S. Treasury, but also New York State and New York City. So we paid, a fair amount of taxes.
So you don't have in your office anywhere a check that says $1 billion plus the U.S. government? You don't keep that check?
Yeah, I don't keep the check, but I do keep the tax returns, both the state tax returns and the federal returns.